on the computer. Awesome, awesome, awesome. Let's get it. Cool. All right, so we're back again, guys. You guys can see my screen, right? I am sharing my second screen on GBP USD. Cool. Awesome. All right, so I'm pretty sure we went over this last market outlook, and I did actually fail to post it on the on YouTube. So I'm going to go ahead and put that on YouTube today. Make sure that I get it done. Of course, we got to, observe our most important tasks, MITs, and make sure that if they're done, if they can be done in 5 minutes, then we should be doing them immediately. Okay, so let's go ahead and get started looking at GBP USD. So we have had a little bit of a sell-off from the original entry up at 1.3193. We called that trade in the Telegram and in the let me go ahead and just show this to you guys. We called the trade at 1.31927, and it came back and whipped into our entry a little bit ago. So our original entry right up here, and we stacked some more positions going down even further, coming from a, let me go ahead and show you on the 1 hour and order block. So there's an order block right up in here, a bullish order block, where we wanted to go ahead and just observe the banks go ahead and submit their orders up in this area. And of course, what do you know? We move it very strongly away from this area, otherwise called supply. So we had some very decent supply up in this area of 1.3193. Sell off again, went ahead and took a couple more positions. We did get stopped out of those positions as they went a little bit lower. We got stopped out at break even in the Discord. I did submit these in the Discord chats. This one thing I'll show you really quick. So, let me grab it. So in here, this is where I submitted it right up here in the trade ideas. It would take forever to go back and look at the call that I made, but just for reference sake, that's where I'm calling trades right now. In preparation for swap trades. So when we're looking at GBP USD, remember that I talked about this whole bullish order block that we came back into, and then we sold off again, hitting take profit 1, 2, and 3. But before we did that, in Discord, I had told everybody to move their stop losses and break even. We learned our lesson from submitting our stop losses and break even too early. Give me 1 second. All right. Sounds like I had some a little bit of a choppiness to my audio. Can you guys hear me now? Let me make sure my Bluetooth is on. Sweet. Everything's good. Perfect. Okay. So where were we? We were talking about GBP USD. Here's what we were observing, the price action above right here where the order block was. That's where we wanted to make our original entry. So we did. Hoppy and choppy. Is it still choppy? No. It's on a blue. That might be it. Hang on 1 second. Let me try to fix this really quick for you guys. Okay, I'm back. Can you guys hear me better? All right, is this a little bit better, guys? Huh. That's interesting. Can you guys hear me better now? Sweet. You know what I could do really quick? Let me try this. We're going to solve some problems here really quick. Okay. Whoa. Is that better, guys? Can you guys hear me better now? Perfect. Awesome. We fixed it. Awesome. I had to log into my other account. All right, cool. So now that we fixed that, let's go back in here. Okay, one more time. Can you guys hear me perfectly? Awesome. All right, cool. So we're going to work on that, guys. Sorry about that. All right, let's continue. So what I was saying earlier, let's just recap. I know that I just beat a dead horse, but we were looking at this order block. We sold off, and unfortunately in the Discord, I told everybody to, well, it's not unfortunate, but I did tell everybody to move their stop losses back to break even right here at 1.3193. And what ended up happening, we got stopped out at break even, but everybody on the Telegram side, who I did not tell to put your stop loss break even, congratulations, you got 100 pips. So let's move a little bit further into what we're anticipating for the next week going into GBP USD. I'm talking about a buy, okay? I did signify in a couple of, let me see if I can find these. Okay, so these are the take profits. This is the previous entries whenever we documented that. Let's go a little further. Let's go see where, okay, so here's where we said that we're going to have a buy entry, right? I was really just kind of constructing a different perspective. I wanted to show you two perspectives that we were working on. And that is selling into high reaction areas where order blocks are lying and knowing that we're now in an uptrend, okay? I do see this as an uptrend. We did reach down here to the 1.3093 area. When we've reached, well, not quite to the 30 area, but you know what I'm saying, right down here, right? So, no, wait, that's right, 1.3093. That's what I said. Let's go back and look at this. Okay, re-inspect your work. And then, yeah, the recording may be a little bit choppy. I'll probably have to go back and re-edit it a little bit. But anyway, so we're double checking our work. Our Fibonacci said this is where our entry is going to be at 1.3093. I think we actually came down here to 1.3060 at one point, and indeed we did. And this is where we wanted to have a little bit, this is where we wanted to have an entry right here, okay? And right now what I'm looking for, I know I called another GU sell, but what I'm going to encourage everybody that's on this Zoom right now, I want you to close it as soon as possible, because what I'm anticipating is a continuous buy. Okay, I know this is a counter trend trade, counter trend pullback, sell off, and I do like to sell during those times, because we know that in a longer term perspective, going into the dollar index, let me go ahead and pull that up for you guys.
And then I'll explain what happened in Euro USD in a second. We did reach down into this area earlier. Let's go to the DXY. Okay. So we did not reach the 100 area, and I'm actually really relieved that we didn't go to the 100 area. And the reason why is because I know that I don't necessarily know this, but I do feel like looking at the dollar index now, comparative to what we were guessing previously, that we're kind of going into a bearish trend. It's kind of like looking at the young lady, old lady, picture, kind of making a comparative here. And, I really like the idea of, flirting with, down here to about 94.59 area, 94.52. I'd really like to see that happen right down here. And say that does happen, and we continue to, if we do break this structure right here at 94, 52 through 46, if we break this structure right here, there's no doubt that we could, potentially come down here and potentially just bounce off of that bottom right there and maybe even see a lower low to about 89. Who knows? And it's funny to say that. It's funny to say that who knows, but if you just look back at structure, I mean, it kind of looks like it was a pivot point in this whole 98, 96 area. To me, whenever I see things like this, big pockets, these are big pockets of money down here. These are pockets of money. And, to be able to see that and know that this up here could potentially be the same thing. Remember that there's always variations on the theme, guys, when you're looking at, potential setups. And always bear in mind the other side of the trade. Don't be emotionally attached to the fact that it could potentially go up. And if it does, no big deal. We're probably in a pullback, or it could continue in a trend. You never know. These are the expectations that I want you guys to go into with this week. And the reason why is because we're practicing risk aversion. We're not, practicing flipping accounts here. We're talking about compound interest, guys. So more often than not, when we're looking at structure trades, we're looking at structure trade right now, guys. We're looking at structure trade for GBP USD. What do we expect when we're walking into the rest of the week? What do we expect? Are we expecting a continuous downtrend? We don't know yet. We just need to see where it reacts. Like in price, this right here is an order block, guys. That impulse right there is an order block, and it's been in this area multiple times. Look, that I can even take this whole take profit. That's why it was one of our take profits. I mean, there's an order block back here, a bearish order block, where we're defining the fact that inside of this consolidation that we can see institutional levels. 1.3660. That's an institutional level. It didn't quite break that, but we definitely had some institutional properties looking at these these candlesticks within this box. So what I'm teaching you is the fact that we're able to somewhat predict. I'm not saying 100%. I'm saying maybe 80 to 90% that we can spot where price may or may not react. And that's supply and demand, guys. That's supply and demand on a commercial level, on an institutional level. That's what I want you to think about. Okay. So say that the dollar is no longer in, let's look at retrospect. Say that the dollar is no longer in trend. Say that it's choppy. And then GBP USD just regains its, overall bearishness from, weekly perspective. And we closed above the closing prices in this area. I mean, it makes sense. that this would be like a retest. Like this right here, this area would be a retest. The impulse indicating that there was a bearish order block down here in the weekly time frame. I mean, we can't be bearish forever, can we? No, certainly not. And this right here, down here, let's note this. Let's note this right here. Liquidity pool. I would say this is where the institutions were playing for a little bit. Okay. Nice impulse down. Here's a bear. Here, these are bearish order blocks right here. Okay. Before the incline to the rest of the move. And then you just, you go to the top of the order block right here. See? That's how we can potentially find more entries in the market. Okay. Can it come down here? It's really possible. But right now in the interim perspective, the weekly perspective, I don't see a continuous bearish pattern in this direction. Even though we do have a lower low down here, we did break a high structure. And what I would anticipate from this high structure being broken is, coming out around this area where the bottom of the first impulse leg, before the first impulse leg, is where I would see our take profit to be. Let's move this up a little bit. Right there in the middle. Perfect. What kind of potential can we have in this move, potentially? We can have about 684 pips. So to answer your question, John, yeah, I would say that this is bullish, because if we take a look at price right here, okay? Price right here is at an indecision. It's completely, right now that shows signs of bearish pressure. If we have a lot of bearish pressure in a movement where we've had strong movements, through this area, through price point, we've moved strongly through this resistance, right? Way before here. And guess what we're doing right here? We're moving strongly through it right here as well. So with this being the perspective on GBP USD, I would say on the weekly time frame, we're a little bit more bullish than bearish right now because of this extreme volume. And this isn't take profit. This is not take profit candlesticks, guys. These are not candlestick profit. These are not take profit candlesticks. These are institutional order flow. This is institutional order flow on the weekly basis, on the weekly time frame that you're looking at right now. Okay. I have a lot of confidence in this bullish GBP right now, being the fact that the whole Brexit thing was a joke. Honestly, the whole Brexit thing was a joke, and I'm not saying that to I'm not bashing the country. I'm not bashing anything that from a political standpoint. What I'm saying is that it's a joke in reality, because it's not going to happen. There's no European secession. That's not going to happen. Okay. And it's been confirmed from, just from what PM May and the rest of the council have been, speaking about. There's not going to be any exiting. That's just an excuse for the institutions to move price away from, a weekly supply. I mean, long ass time ago, when it all started. I mean, look at how long it's been declining. How much longer are we going to decline in a GBP? You know what I'm saying? Like, how much longer are we going to decline? We're in a choppy range here. We fell from 2.1, 2.15 back in, oh my God, what was it? 2007. That's way too much bearish. That's way too much bearish tendency. And I think that, since we've found this right here could be classified as the spring, guys. If you guys look at the Wyckoff distribution and accumulation template, I don't really have it on my thing right now, but if you look at this area down here, right, this could be considered the spring of, of the bullish movement to the bullish movement, basically. So we're coming to, basically just find all the stops, right? That's all we're doing. Where did I put my texts? There it is. Cool. Put it right up here. Love it. excuse me. So we came to the spring, we bounced, you know, there's a mitigation order right here. There's an order block. We bounced off of the bottom at 1.24, basically 1.61 or 1.2361. I'm sorry. And that's an institutional level because it is a 20 level. The last four digits right there, not the last four, I'm sorry. Exclude the pipette, the 8 right there. You see what I'm saying? The fifth decimal point. And this was on a 60 level. It was on a 60 or 80 level. So between these two levels right here, it's an institutional level because of the, you know, it's within the 20 levels. And now what we're doing on the daily, let's take a look at the daily here. From an interest, just from like it's not an intraday perspective per se, but it's more of a, you know, intra-week perspective. So we're looking at this as being the newfound, this looks like a newfound, you know, support, guys. So it doesn't look like we're going to be breaking that support anytime soon. It's very strong support. It looks like a healthy support to my understanding. And then we've got a nice hammer candle just to, you know, solidify that. I personally would ignore the this upside down hammer right here, just simply because we're in the weekly institutional order flow to the upside. Let me see if I can find the let me see if I can find that Y. I can show you guys the Wyckoff thing here in just a second. Let me see if I have it in my pictures. Actually, it should be in my trading ideas folder. Not in that one. Give me 1 second, guys. I'm going to pull this up for you. Wyckoff schematics. Cool. Here we go. Okay, so comparatively from this one, I'm going to save this photo really quick. I don't know why I don't save it. Schematic. Cool. Okay. So that's where I save all my trade ideas, by the way, folks. So anyways, let me go ahead and pull this up from my pictures and then just go ahead and just make a comparative photo for you on the weekly here in just a little bit after I finish this idea. So what I was saying anyways, institutional order flow to the upside. You know, we're showing signs of strength in this area. And I can actually pull up the schematic and compare it to that whole idea. Go ahead and just do this for you. Oh, nope, don't want to exit out of that. Okay, so this is where we had the spring right down here. We test. I know that we kind of dove a little deeper in there. Keep testing, and then we're just kind of increasing our orders to the upside. And this is where our sign of strength would be right here in the 1.3084 between the 1.3193 area. So that's where I would kind of get my inclination to have a buy scenario. If we pulled up the weekly and then made a comparative, that would be the sell schematic right here. And we would be at the bottom of the sell schematic right down here. Okay. So the sell schematic comes from right down here, this boom, 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 boom. Then we started doing this. Okay. And now we're having that accumulation right in here where the spring is. And we're going to go ahead and just shoot up a little bit. Check the chats. Love you guys. See, when I'm looking at, I'm not like looking at Steve Morrow's, you know, market maker method, honestly. I'm really just looking at the patterns, like the institutional patterns. It's, you know, it's a basis for you to look at your, you know, I guess it's just a basis to look at your charts, really. It's pattern recognition. After you get past the phase of, you know, pattern recognition, you just really start to understand psychologically where the banks are going. You know, you kind of, you know, start to understand a little bit more full in which direction. Like, you want to go take the longer term movements. You don't want to take the shorter term movements because you find yourself over trading. I did at one point find myself over trading the the shorter term. Let me turn my camera on really quick for you guys so you guys can see me. Yeah, my hair might be a little bit messed up, but whatever. So basically what I'm saying, guys, is just understand that once you're past the pattern recognition phase and you start to really just understand that there's only two drivers in the market. Okay. It's going to be, retail traders. You're watching retail traders, you're watching them getting stopped out and all these different, techniques they're using, trend lines, support and resistance. Well, it's designed 99% of the time for people to lose, 98%, I'm sorry. But once we start to really understand that we can actually trade with the banks instead of trading against them, trying to, like having this mindset where we're against the banks, like don't be like that. Like, because I understand whenever we start to understand this new information, we're just like really opposed to, oh God, they're our enemy. You know what I mean? Don't allow that to influence your conscious thinking. Don't allow that to, really cloud your judgment. Start to understand yourself as a banker, trading as a banker, understanding that these right here are stop hunts. They're running stops right now. They're finding stops to, basically bank out of the, the whole selling scenario, get you out of the, get you out of the frame of mind to trade, and then move price up and get you to take this sell right here and then move price up again just to stop you out and take all your money. That could potentially happen because we look at this whole scenario where this bullish engulfing could possibly be, oh, well, it rejected this whole area of 1.3193 and we should be selling it from this. No, look at it from two different perspectives, or maybe even three. There could be three. It could just sit there and chop up like right here, the whole price point, wherever we entered. That could potentially happen. There's so many different, perspectives that you got to be looking at this. And I stress this a lot because it's opening your mind to flexibility. I'm growing from this perspective where I'm done selling most of the time. What I'm looking for are now potential areas in the major pairs where the most liquidity is, because I know that, traders are most successful during times of liquidity. Okay. Probabilities, ceteris paribus, economics. That's kind of an economics term, meaning that all variables are the same, all variables being the same, including your trading plan. Then when you're executing in high liquidity, when you're operating in high liquidity times, things are going to be a little bit easier for you. I feel like they're going to be a little bit easier for you to trade in. Okay. These are just some discoveries, by the way. I've been writing all of this stuff in my journal, wherever the heck I put that thing. Obviously put it on the floor. That's kind of disrespectful, but this is one thing that I would encourage you guys to do is, get yourself a journal. Get yourself a journal and start writing your ideas down. Start, really just anticipating, like write down what I'm saying in these market outlooks. Go to the charts and start exercising some of the stuff that I'm talking about. And eventually you're going to start to really understand, oh, Jesus, there's some really good stuff in here, guys. What I learn is not just for me. Okay. Understand that. I'm not doing this for a marketing ploy. I'm not, trying to get you to like me or anything. What I'm doing is I'm really trying to impact you and show you, ways that make me successful in the market and made my mentors successful in the market. And mind you, they're all educators in the company. Okay. So when they say to do something, I go and do it, and I just listen, and I like the results. I want to get their results. So I'm going to take some notes, and I'm going to really try to truly understand what level they're on. Okay. That's what mentorship is about. And that's what being a mentee is about. But understand being, a mentee or a mentor, you're a mentee to the mentee as well. So I'm always learning something from you guys. You see what I'm saying? If I didn't have feedback, then, where would we be? If we didn't have feedback, where would we be? Because what we need is feedback, because that's what shows us what our results are. That's our internal results. That's our internal results speaking to us. So really take that into consideration, guys. I know I went into a tidbit about psychology here, and how things are really transforming our trading as we know it, as we continuously walk in our journey. I really want you to go to the charts this week and sit on your hands. I challenge you to do that. Literally just sit on your hands and, observe. Look at some setups. Look at the setups that are most profitable and take the trade on the highest probability setup. Stop forcing your trades, because I know I've been there at one point. If you're in that mindset right now, I'm talking to you. If you're in that mindset where you feel like you have to be trading every single day, and you know what? We just got off of a Zoom just earlier today talking about this. Zach and I, we were talking about how we don't need to trade every single day. Day trading isn't what you think it is. And I'm super happy and grateful that Zachary actually gave me that idea, because that was actually in my I wrote that down from our last call. Put that in my thought journal. That was something that really inspired me, because I knew that, when I started to step back a little bit and started looking at the charts a little bit more and taking a lot less positions, I was protecting my trades. I was protecting my equity. Once we begin to understand how to protect our equity, that's when our equity can grow. Okay. A lot of us don't think about that. Honestly, we all think about, how much money can I make? Or when's the next setup? When's the next, trade? Swipe trades, or we get on the harmonic scanner looking for more trades. We feel like we got to be working. We're programmed to continuously work, right? But we came to actually trade. We didn't come here to, and by the way, giving all this credit to Zach, because he gave me this idea to put this on this, this webinar. We didn't come to trade to create a job. Okay. We came to trade to give ourselves time freedom and to give ourselves flexibility, more options. What that simply means, ladies and gentlemen, is try not to trade every day. Try to look for the most beautiful setups that you could possibly define, like just textbook plain, clear setups. That's all I'm telling you. I'm really just saying, like, when you really stick to your trading plan and take the most quality setups, that's when you know you're going to start being consistent. That's when you're going to understand, oh wow, if I just use proper risk management all this time, if I just if I was just a little bit more picky, man, I'm being so much more picky now, and now my trades they're coming out so much more clean. Like, I've got better entries, beautiful entries on these trades, because I decided to take notes. I started to listen to the educators. I started to, really, take the time out of my day and take some action. You see what I'm saying? So take some action, back test, and really come to grips and understand that there's more to learn every single day. We're not perfect human beings. I'm not a perfect human being. Zachary's not a human being, or he's not a perfect human being. He is a human being, and he's pretty close to perfect. But what I'm really saying, guys, is that we are all continuously learning all the time. Okay. So in order for you to really sharpen your axe, you got to cut down a tree, right? I told you guys, I put this on Facebook as a tool, as an axe. I have to sharpen myself for 6 hours in order to cut the tree down in 30 minutes. That gives me the confidence knowing that my axe is sharp, is super sharp, is going to get the job done, right? So that's what I'm saying when I'm talking about continuously. When you're continuously training, not trading, training, and you're starting to understand, you're just going on these charts like this. Look, you're literally going back here and you're marking up, okay, this is what an order block looks like. Let's watch and see what happens. And I'm just I'm gonna go ahead and just notate it in my book really quick. Like, this is an order block. This is the time. This is the price that I put it down as, and this is where my entry will be. Right? You can sit there and do that on the weekends. Right? You can go back. About almost, I don't know, a couple of years back, and you can go and back test all of this different stuff and just press replay. It's worth it to buy and I'm not selling you this, but It's worth it to buy the, make the business expense, okay? It's an investment in you, okay? Like you can literally replay, and I haven't done it yet, but I'm supposed to be doing it. Way to lead by example, right? Anyways, so you go and buy this thing, you go and buy your subscription to TradingView, and then you just go back in time and you replay all of the different scenarios that you've been learning from all of your favorite mentors, your favorite, traders, your favorite, educators, swipe trades masters, whoever. Like you're learning from all these different people, and you're taking your information, you're just filtering out what emotionally works for you. See what I'm saying? But then again, understand this, it's 90% mental. 90% mental, 10% technical analysis. Honestly, guys, like a 2-year-old could do this. And there are 19-year-olds that are withdrawing almost $5,000 in a 2-week time period that, I didn't even know that was possible, to be completely honest. And you know what? When somebody learns it that quickly, that's because they put the time in. That's all they did. So put the time in, guys, and just go through and really try to understand how the banks trade, or understand your psychology whenever you trade. Understand your intuition. That's really what I try to preach a lot, because I know that that's something that we all struggle with. A lot of people struggle with it on a daily basis and need a reminder to really just, practice. Practice makes permanence, not perfect, makes permanence. So that kind of begs to the question. We were going to walk into Euro USD too earlier. You know what we did? We bought up from the area that we were interested in, which was really cool. And that was right here at the 1.32. And I think we went down a little bit further than that earlier. Let me go ahead and take a look at the 4-hour price. Okay. So I'm pretty sure we came down to this little area right here. I know we haven't hit 1.266 quite yet, but the fact that we came down here and touched this major level of 1.30 and then rejected off of it, that was where that's where we could have bought to as well. Let's go ahead and just like draw a Fibonacci. I know this is a little bit far back, but this could classify as an entry right down here at 79, 70, and 62. I mean, it's a defined low and a defined high, so it's a big difference from 2018 all the way up to January of 2019. But we can still find longer term areas where it could be really important, where we can find order blocks that we kind of dip into, like right down here. Okay. Had a nice, and like I said, you remember how I was saying that we're having I feel like a bearish dollar. That would also give us an inclination to buy, of course, GBP USD, and to go ahead and buy Euro USD, right? So we bought Euro USD down here, and we're going to go ahead and look for another entry, probably somewhere around the realm of the equilibrium of 1.1394. Okay. That's what I'm looking for right here. And this is where we had our first bearish order block, right in this area where this blue line is. Okay. And as soon as we bounce off of that, what I'm anticipating is a nice rally up to somewhere around 1.15. We could probably hit 1.16 as well to close out for the end of the week. Let's go over here. Okay. This is where our last high is in 1.1626. So in order to continue a bullish outlook, we'd have to break that area. Let me go ahead and move my water over here. Okay, so all of these different levels that I plotted out here, they're all daily levels. Okay, and here's how I define all of these daily levels. Actually, they may have been weekly levels too. There's daily, and then there's 4-hour levels inside of that. They're all defined by just bigger term moves, different types of candlestick patterns and structures that occurred in these areas, up into resistance as well. Just really a basis for me to navigate between price. What I'm really doing is I'm navigating between whole levels, 20 levels, and half level digits. And then let me go ahead and move this over here. I'm going to move this too right over here. because I really am aiming for the 117 and 118 level. I really want to see it come back up here before we have a longer term bearish, you know, a longer term bearish outlook. I mean, it could be possible that we break above it again, come back up here to about 121. I don't know. We'd have to wait and see. I think it'd take us about maybe 3 to 4 months to see what happens when we get there. Maybe. I mean, it could take us a little bit. Depends on the volatility that we have in between now and then. And this would be, yeah, of course, up until like May when that would happen. So if it does happen, amazing. Let's see what happens. But longer term, let's just count on us continuous. I don't think this box right here is going to be of any importance anymore, to be completely honest. Even though there is an order block here, I think we're finished with this right here. This bullish, this bullish candle kind of shows me that we're ready to just skyrocket out of these areas and just go straight into 1.16. In my honest opinion, that's what I think. And when I stress honest, I mean that's what I feel like is happening. So with that being said, guys, I'm really just focusing on Euro USD and GBP. I'm focusing on anything within the Euros, the European Union at this point. USD CHF, we can go back and take a look at that as well. Let me go ahead and clear this out. Oh, hey, that actually happened. Let me go over here into Trading View. Nope. Trading View. There we go. Someone's using Bollinger Bands. Okay. So we're going to look at USD CHF, and then we're going to go ahead and close out, guys. And the reason why I'm pulling out of the reason why I'm not in the Japanese yen right now is because I'm really looking at the euro strength. I'm looking at the Swissy strength, and also the GBP as well. So let's go a little bit further into USD CHF. Cool. All right. So this is what our market looks like at the current moment. I know this looks really menacing. It looks like we're going to have a little bit of an uptrend, and we may actually have an uptrend. But on the contrary, this is right here this is a little bit of a bearish scenario because we did reject a strong resistance, and that includes the strong resistance of 1.0. So we've rejected it quite often in the past 4 to 5 years. I would say that usually history repeats itself, and this is where our entry was, folks, right up in this area. I'm pretty sure we were a little bit higher into 99.85. Okay. There we go. Okay, so let's go back over. I don't think I didn't call it in here. I called it in Discord. Let me see. Go up a little bit and find it. There's the GBP USD call that we're going to close at market open. Okay. Let me see here. Kyle actually called it for me, I think, when I asked him to. Here's another scenario when I was looking at it from a different perspective, where the harmonics were overlaying. And this is where we had the entry. That was the 85 level. Let's go back up here really quick. Okay, so yes, 99.85. Okay, that's where we entered, and we're continuously holding. We've already hit TP2. I'm not moving my stop loss to break even quite yet because I feel like we can have a longer term sell off. And this is what I want to tell you guys really quick. I wanted to show you that we could potentially come down here again into 97.46. Okay, and what I want to do is I want to wait for price action to tell me whether or not we're going to, after we sell off again into this area, if we're going to break it. It's kind of what I want to see. I want to see us break it. Come back, retest. And then once we see that retest, we're going to go ahead and sell it again to 94. So longer term, that's what I'm looking for. And then we can go in here and take a look at the schematic. This is the accumulation schematic. Let's go look for the distribution schematic. Okay. Cool. Now I'm going to open that up and I'm going to show it to you, and then we're going to close out. Okay. There's the sell-off right there. And then on a mini chart, I mean, we're kind of like in an accumulation ranging zone. So if we've rejected a ranging zone, then we're going to more than likely come down here again. Let me go grab that. Okay. So right up here, this is where we have our, test. This is in phase B right here. Then we have our lower point of resistance where we have supply yielding us a nice looking resistance line up here at 1.0. So we could, potentially see some drop down here into, let me go ahead and just kind of like extend that a little bit into the 92 area too. So with that being said, guys, that's what we're going to be looking at for the rest of the week and the rest of February. Look for the drop in USD CHF and make sure to hold that drop as well. If it comes up here to break even again, or if it comes anywhere near this area once more, or if you want, go ahead and zone into, the 1 hour and just look at some of the, price action and see if you want to go ahead and just sell it again. Okay. I would say with this Gravestone Doji right here, I mean, perfect area to start selling off again, getting out of this range and, putting us in a position to catch a lot of pips. So with that being said, guys, have a great Sunday and make sure to go ahead and tune on to Mike Navarrete's session. He starts right now looking at the market outlook as well. Get another perspective. Love you guys. Have a great rest of the weekend.